Hello, YouTube. As we close out the month of November, there's one chart which really stinks. It's down by 12%, and it's the bond market, the 10-year note specifically. The biggest blowout in bonds since the 1980s sparks an everything rally. Yields plunge, spurs advance in stocks, credit in emerging markets. Investors see scope for more gains with the Fed cuts on the horizon. What does that mean? They think this line's going to keep going down. But as we reviewed on the pre-market stream this morning, we note that we're right here on support. And this is going to be very interesting because the 10-year note is right on support for the monthly chart. We can see that here by looking at our uptrend and noting that we're right here resting on that uptrend. The second thing I would note is that if we look over to another chart, we look here to the dollar, and the dollar was pretty strong today. And when we look here to the monthly chart, what we're going to be closing out today, we note that it's also right here on support. Green is support. Pink is important. We note previous resistance is now acting as support. So this looks pretty constructive. When we look over here to the S&P and the NASDAQ, this is where it gets a little bit interesting. We're now going to remove everything, and we're going to note that we're right here at resistance. So the dollar and the treasuries are right on support. And at the same time, we note that stocks are right here at resistance, right at their 52-week highs, right around 459. If we look over here to the NASDAQ, we note that same thing, but it's actually just over resistance. The monthly high here is 387.98. We closed at 388.83, about $1 over. So what does that mean? We actually held it. And if chips lead tech and tech lead SPY, then what we should see is this pattern play out on the S&P 500 where now we didn't just, we're not currently over the candle close. We've actually secured it and we've closed over. So if we look here a little bit closer, this is where the pattern might continue to play out. If we're looking for more gains, meaning bonds go down, stocks go up, it's pretty simple. We're going to look here to the box we have highlighted, and it shows us two big fat green bars. I'll now delete everything so it's a little bit easier to see. We see these two bars right here. That's what I'm expecting to see happen here. The one part that's missing, though, is that after we actually make our November high, we're actually in a new blue sky breakout, a new 52-week high. We don't have that here. We've not yet gotten over 460. 460 is going to be very important resistance. If we look to the month here, which is December, well, November is usually the best month of the year, and December is usually the second best. So by closing at or near the high of the month, we should at least see a poke over 460. If we don't, I would say that's a massive warning. If we get over and fail, also a warning because it's going to be a failed break. Here's the really interesting part too. On a daily candle close, they saved 456.38 by 2 cents, 456.4. They saved that close by 2 cents. Very, very interesting. And after hours, we're a little bit lower, but as of right now, both the S&P is back over. The NASDAQ's actually flat on the week. So what exactly is happening? Now we're going to tell you the story, right? Jerome Powell might be a little bit tone deaf here. He's going to be talking tomorrow at 11 a.m. I'll be paying attention. I'm going to ask you for a huge favor as we go forward here. If you could please consider smashing the thumbs up and subscribing to the channel, I would greatly, greatly appreciate that. Thank you very much for your support ahead of time. So as we look here, Jerome Powell is going to be talking at 11 a.m. tomorrow. Is he going to hear what the market's saying? Is he going to ignore it? Or is he going to give more of the same rhetoric as before? Here's the reason why I would like to see him get a little bit more dovish. U.S. GDP is really strong. Yep, that's part of what's going to tell him to be a little bit more hawkish. More people are losing their jobs. We're actually steadily over 200,000 now, and inflation's coming down. We're currently at 0.2 in a month over month, and we're down here at 3.5 on a PCE. If we look over to Europe, though, the trend is pretty clear. We're seeing less inflation. 2.4 is like pretty close to their target. Their target is 2. 2.4 is not that far off. So I'm not sure what Jerome Powell's going to say tomorrow, but tune in at 11 o'clock because I think it's going to get pretty interesting. He's either going to give us a pass or he's going to give us a fail. And the market's getting a little bit more greedy, advancing by 3 points today and roughly where we were about a week ago. If we look at the chart, well, the NASDAQ's right where we were a week ago. And right now, the S&P 500 is where? It's a little bit higher than we were last week, up by about 1 point or about 0.2%. So we're going to have to listen to what Jerome Powell has to say. It's like we're on the other side of him here, right? I'm not sure. Cautiously optimistic. Now I want to look here to, I want to quickly remind you too. So we have 2 days left on our sale. This is going to be ending on Saturday night. If you've liked anything we've gone through, or if you've joined us on pre-market streams, I would really encourage you to consider joining us if you want to see what we do after we sign off. There's a video here I'll leave at the end as well if you want a bit of a preview in terms of what you get when you sign up. We'll also talk about this. I don't know what this is. It looks like a truck. It looks like we're on Mars. We'll talk about this in a few minutes here. Looks like tech is moving a little bit lower in after hours. So we've been talking about how we're currently at about this period right here. We talked about going up. We've talked about going sideways. I'm not going to bore you with all of that. But if we now remove everything and we put in a line chart, here's the part that's interesting. So we're flattening out like a pancake, and now we're actually going up a little bit. So my question is, as we form this high, is this going to turn into the high that gets sold off on Jerome? Then we bounce back up, get a little bit of volatility into December, then we rally up? Or are we already at the point where now we've gone sideways for long enough, we're melting up a little bit, and now we're just going to do what we do into December, which is up a little bit more? The move in November is quite large. The move in December is still good, but it's not as not as big. And we already showed you that on the monthly chart. So if we start getting this price action here, I'm looking for the potential for volatility. And to make this really simple, because we're looking at a daily chart for this pattern, I just want to show you one thing here. It's the weekly chart. So I've been focusing a lot on the failed breakout lately, but I want to make this extremely clear because we've been talking about this pattern ever since we formed our low. It's extremely simple. So we talked about how we need to form a low. Higher lows mean defense. Okay, so if higher lows mean defense, do we have higher lows ever since the bottom in October? Low, higher low, higher low, higher low, higher low, higher low. Yes, every single week has been a higher low. Here's the part we want to make sure we're mindful of. So that is defense. The bulls have played 100% defense ever since the low. When it comes to offense, close over the candle high, 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 currently over the candle high by 2 cents. So that's the part that I'm less sure about. The bulls are playing defense. We can't ignore that. They got higher lows every single week. They've already played offense. They made it over last week's high. The question is whether or not they're going to hold it. Why? Because signs of exhaustion, the market looking tired, is exactly this. It pokes over, fails to hold it. So we have to make sure we pay attention to this. But until we see a weekly lower low, it either means that we're either going to void this move or it's getting delayed. So if we don't get a power slam tomorrow on Friday, I think we might have to kick the can till next week and see exactly what happens. So I don't want to overcomplicate today's video because I think we've been talking a lot about all these different charts. So what I'd like to do is actually just flip over here to those weekly charts we talked about because these are the ones that really matter for me. It's tech. So if chips lead tech and tech lead SPY, Apple is completely flat, but it's starting to go sideways. This one doesn't look terrible. Microsoft was bullish last time we looked. More hollow candles, right? More defense. When we look here to Google, this is what I don't like seeing. We see a failed breakout last week, and now we see a lower high and a lower low, and we're currently below the low. That's a warning for tech. Google doesn't look good here. The second one is Amazon. So Amazon here, failed breakout twice in a row. We got a higher low still. So they're still playing defense. I'm just a little bit cautious because of the pattern. I know what could happen after this. We usually take the staircase up and the elevator down. I don't want to get caught in the elevator. Look here, bearish engulfing for NVIDIA, closed below the low, currently below the low, down by 2% of the week. It's not bearish yet, but it's definitely going sideways between 400 and about 500. It's lacking direction. So it's at risk of going back down to the lower end of support at about 400. Moving on to Meta, same thing, failed breakout, and then we got a lower high, lower low, currently below the low. This one looks extended, looks exhausted. So people are probably locking in profit. That would be my best guess. Golden Cross is usually bullish though. Moving on to Tesla. Well, we got a inside bar, and then we got a failed breakout, and now we're down in after hours by about 2.5%. So is Tesla going to drag the market lower? Is that what's going to cause this move here overnight for us to gap down? Well, what exactly is happening? Tesla Cybertruck to start at $60,990. Deliveries begin. Cheapest vehicle available in 2025 with 200-mile battery range. Cybertruck is 2 years behind schedule. Difficult to produce. Buy the hype, sell the news. That's what it looks like to me. So if we go here to our monthly chart, it's pretty bearish. It's most bearish out of all the trillion-dollar companies. And right now, here in after hours, we're basically back to that relative low or support we were looking at. So I'll be watching to see whether or not we actually hold the 50 DMA into the close. And I want to see whether or not Tesla actually gives us some drag or actually drags the market down a bit. And then going into 11 with Jerome, I want to see if we get a different spin or if the market decides to actually reverse course. If you want to see more about our algo system and joining me, Justin from YouTube, after I sign off, you can see that video over here on the left-hand side. If not, I look forward to seeing you for the market open tomorrow. Wish you the best of luck, and I'll see you guys tomorrow. Thanks again.